Alrighty guys, so in this video I'm going to quickly be covering trend lines, how to spot them, how to draw them, and so forth. So first of all, trend lines, what are they? I've pulled up a quick definition. So trend lines are easily recognizable lines that we as traders draw on charts to connect a series of prices together. Now that's a really good way to explain what the trend line is. I'm going to jump over to the charts now, looking at US oil right now. I'll jump down to a 4-hour graph just for the purpose of this example. Now when we're looking at trends, we're looking for either bullish or bearish movement. So an uptrend or a downtrend. We're going to take our trend line. I've got it up on my favorites box up here. To the left, it is the first tool, the trend line. Now what we're looking for is that pattern, an easily recognizable line where price is essentially being gravitated towards and forming our trend line, whether it's a bullish or bearish, whether it's an up or downwards movement. So what I'm going to do is, I can see one straight away. I'm going to take my line across the bottom and come across here. So here we have a bullish or an upwards trend. As you can see, prices come down, and now when we're making in this case, bullish trend, what we're looking for is higher lows. And what a higher low is essentially a higher price of the next low point in the run. So prices come down, had a run up, had a pullback, and formed its low. Now this is a higher than the previous low of the run. So a higher low, close to the trend line. Prices rallied up, came back down, formed this trend line, a higher low point. Higher low, higher low, higher low, and here we can actually see that price has broken this trend line. So now what we could be seeing here is a bearish trend line. Now again, another good example is what I'm going to do. I'm going to take my trend line and form a bearish trend opposite to the bullish trend. Whereas we're looking for higher lows, what we're looking for is, on the flip side, lower highs. So complete opposite. As prices peaked, we're looking for lower high. So it's lower than the previous high, and it's the high point of that movement. And now we've rejected, coming down, a lower high, and now we've broken that trend line. So now what we could be looking for here is potential move to retest our trend line for further continuation to the downside. So we're in this consolidation zone. So what we could be looking for is this pullback to tap the trend line, forming that lower high. And then again, to continue forming the lower high, and so forth. So what you need to do is jump on any chart. Let's take our pick, any pick, and be able to quickly spot a trend line forming those higher low. We did break through, but continued to push through. Now interestingly, looking at this, as we form these higher lows, we've dipped down and rejected, bounced off, forming the next higher low. As we've broken through the trend, again what we're looking for is that retest on that trend for further continuation from that rejection. As you can see, it tapped again and it's then gravitated towards. If I extend that right out, here we can see that trend line is continuing all the way through. Even though price has come down, rejected, it has gravitated back towards the trend line, consolidated for quite some time, broken through back into the upside, and then we've now formed our next higher low, and there we go. So that's quickly touching on the trend lines. So you should be able to go back in time and be able to spot these trend lines on the upside, on the downside. And once again, the upwards trend or the bullish trends will be forming these higher lows, meaning the low point is higher than the previous low. And then on the bearish, for example, let's just say here, we're forming these lower highs, lower highs, lower highs, lower highs. So that's what we're looking for, the higher lows and the lower highs. And there you have it. That's what we're looking for when we're looking at trends.